Welcome to the Riskwiser zone, where we navigate the twists and turns of the financial markets with a healthy dose of skepticism and a long-term perspective. I'm your host, Lewis, and I'm delighted to be your guide through the complex world of stocks and finance. As we begin today's show, it's clear that the markets are abuzz with anticipation. U.S. equity futures are on the rise, following a record high in global stocks, and all eyes are on the Fed's potential policy easing. But, as I always say, don't panic, or should I say, don't get too caught up in the euphoria just yet. After all, the more things change, the more they stay the same. We've seen this movie before, folks. Now, let's dive into the top story of the day. Ukrainian President Volodymyr Zelensky and European leaders are preparing for a call with President Donald Trump ahead of the U.S.-Russia summit. This is a developing story, and we'll be keeping a close eye on it. As I like to say, where do you stay your money Monday? Well, perhaps it's time to take a step back and assess the situation before making any hasty decisions. Meanwhile, CoreWeave has taken a tumble following a disappointing earnings outlook. The perils of rapid expansion. It seems that even AI data centers can't escape the gravitational pull of margin pressure. And Timothy Graff of State Street is sounding the alarm on cracks in the U.S. economy. But fear not, dear listeners, for Sitara Sundar of JP Morgan Private Bank is predicting mid-single-digit upside for stocks over the next 12 months. Now, I know what you're thinking, Lewis. How can we reconcile these conflicting views? Well, my friends, that's where fundamental analysis comes in. It's time to separate the signal from the noise and focus on the underlying trends driving the markets. As I always say, a correction is when you lose money, a bear market is when I lose money. But seriously, folks, it's essential to keep a level head and avoid getting swept up in market hysteria. And speaking of level heads, let's take a step back and look at the bigger picture. The promise of a thriving IPO market and earnings growth in key sectors like tech, communications, and finance are all positives. But as we navigate these choppy waters, it's essential to remember that elves, our technical analyst friends, can only tell us so much about the future. So, what does it all mean? Well, my dear listeners, it means that we need to stay vigilant, keep a long-term perspective, and avoid getting too caught up in the short-term noise. As I always say, the more things change, the more they stay the same, and that's especially true in the world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned. Welcome back to the Riskwiser Zone. We're glad you're still with us as we navigate the twists and turns of the financial world. Today, we're focusing on some key developments that could impact your investments and overall economic outlook. Let's start with a thought-provoking piece from the Economic Times, which caught my attention earlier today. The dollar has slipped due to tame U.S. inflation data, increasing expectations of a Federal Reserve rate cut next month. Now, I know some of you might be thinking, Lewis, what does this mean for me? Well, if you're invested in the U.S. market or have exposure to international trade, this could be an important development to watch. According to the data, consumer prices increased marginally in July, which is in line with forecasts. This has led investors to price in a 98% chance of a rate cut next month. The dollar index fell roughly 0.5% on Tuesday, and against the yen, it was last seen at 147.76. Now, some analysts are saying that while this data does suggest a rate cut is possible, it's not a done deal just yet. Carol Kong, a currency strategist at Commonwealth Bank of Australia, noted that one report can be sufficient to move the policy debate to one side or another. So, we'll need to wait and see how the remaining data plays out before making any strong predictions about a rate cut or an on-hold decision. Meanwhile, U.S. Treasury yields also fell on the heightened rate cut expectations, with the 2-year yield last at 3.7371%. The benchmark 10-year yield was little changed at 4.2965%. Now, I know some of you might be wondering what this means for your bond investments or your overall portfolio strategy. It's also worth noting that President Trump has been making headlines again with his comments on the Fed and its management. He's considering a lawsuit against Fed Chair Jerome Powell, which has added to the uncertainty surrounding the central bank's independence. In other news, sterling gained 0.03% to 1.354, despite Britain's jobs market weakening again. The Reserve Bank of Australia also cut interest rates as expected and signaled further policy easing might be needed to meet its inflation and employment goals. Now, I want to take a step back and remind our listeners that these developments are complex and multifaceted. As always, it's essential to consider multiple perspectives and do your own research before making any investment decisions. In conclusion, the dollar's slip and the potential for a Federal Reserve rate cut next month are just a few of the many factors at play in the financial world right now. We'll continue to monitor these developments and provide you with timely analysis and insights to help you navigate the markets. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got an exciting closing segment for you today as we dive into the world of stablecoins and the latest developments in the crypto space. You might have heard about Circle and Stripe, two major players in the fintech industry, making waves with their new stablecoin networks, Arc and Tempo. These networks aim to revolutionize the way transactions are processed, offering faster, more secure, and more reliable payment solutions. Now, let's take a closer look at what this means for investors and consumers alike. Circle's Q2 earnings report showed strong revenue growth, driven by demand for its stablecoin products. However, despite this impressive performance, the company's shares have come down from their peak of nearly 300. This raises questions about the valuation of crypto companies and whether they can sustain their growth momentum. On one hand, the increasing adoption of stablecoins and the development of new networks like Arc and Tempo could lead to more efficient and cost-effective transactions. This could be a game changer for businesses and individuals alike, especially in the e-commerce and cross-border payment spaces. On the other hand, there are risks associated with investing in crypto companies, including regulatory uncertainty, market volatility, and competition from established players. As we've seen with Circle's shares, even strong growth may not be enough to justify high valuations, especially when compared to peers like Coinbase. So, what does this mean for investors? It's essential to approach the crypto space with caution, doing your research, and carefully evaluating the potential risks and rewards. While stablecoins and new payment networks offer exciting opportunities, it's crucial to separate hype from reality and make informed investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.